Hello, 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 everyone. Good afternoon. The calm before the storm. Pretty uneventful day today. Stayed in choppy mode all day. So we got the CPI though tomorrow morning. That's what we are looking for. Good afternoon, Davey. Hey, Waka Waka. Good afternoon, Patrick. Good evening, Anissa. Hello, Options 22. I did get your emails. Options 22 have not had a chance to look at them yet. I will get to them this evening. It's been a super hectic day. So, hey, Gary. All right. Where do we sit? Tomorrow is probably the biggest day of the week, followed by Friday. Why? Tomorrow we got CPI, CPI, happy, happy, happy CPI. Jacob's here. We can get started. So, forecast is 6.5% for core, 8.1% for inflation rate. Core's projected higher than previous. The headline number is projected a little lower. And then you got the month over month numbers. Core contracting month over month. The headline number expanding a bit month over month. Initial jobless claims and continuing jobless claims also, but they are secondary to CPI. You know what's really nice? Well, besides that coming out at 7:30, and then unless you're trading oil, there's not much else. You can look at the auctions for if you're trading notes or bonds or bills. Other than that, we don't have anything. And it's nice and quiet. Nice and quiet. No Fed speaky. So we had the Fed meeting minutes today, reiterating more of the same. That's why you didn't see anything. There's nothing, no reaction off of it. Nothing substantial, just reiterating more of the same. But keep in mind, Friday you got retail sales. So we're not out of the woods yet in terms of potential volatility, but tomorrow's going to be the big day. Consumer sentiment, preliminary numbers, and still no Fed speaky. Yay for us. So that's where we sit. Besides utilities, absolutely getting crushed. Pretty mixed market. Slight little bounce ups, watching for that bottom, at least that pullback bottom coming in on oil for the short term. You can see that with the sector. Here's your 1 day relative performance. I might start putting this up more often. But you see utilities just getting absolutely blistered. Blistered at negative 300 basis points. The positive today was defensive and consumer cyclical, followed by slight bounce in energy. And then everything else was pretty much negative across the board. But utilities were the thing that took it in the rear. 75 basis point, expected at 85%. This has been climbing. Remember, we're still 3 weeks away from that, so we can still have some movement in it. I don't see much, even in the meeting minutes or the other Fed speak, that would sway from 75. I think they're more likely to do 75 and then possibly go back to 25 in December out of concerns, but risk doing 75 in November. Still in negative gamma, of course. Still 3600s are the key strike, so do not ignore that. Still in extreme fear. All right, did not look at Duck Creek. Tomorrow, by the way, we're starting to get deeper into earnings, although CPI is gonna rock the boat. Going to be interesting to glance at Domino's Pizza. BlackRock, go away. Go away, BlackRock. I will look at BlackRock though, and I will glance at airlines via Delta. So that's the big thing. Nothing after the close tomorrow. Big old blank slate. But besides the retail sales Friday and consumer sentiment, preliminary numbers, This really gets it going for earnings season, and this is market moving. You got some big boys, JPM, Morgan Stanley, Citibank, Wells. So we got some still things going on for the rest of the week. Caught a nice little trade. The micro, there you go. The micro RTY today. Yeah, there was some back and forth trading. I said, we especially after they open with those numbers. Hope more people are starting to look at that tick also. Hello, Raj. Cut a little paper cut today, but I'll take it. Daily chart and AAL looks like a buy. Remind me, I'm going to blaze through some of this. I can't stick around a long time today. I can't do an hour and a half session. I have a lot of things on my plate. Hello, George. Buy should be followed by puts. Okay. S&P bullish divergence is going to be hard to take it a lot lower. I think we're going to need a pretty hefty miss. A pretty hefty miss based off positioning. Still not been able to break this key area I was talking about. Retested again today. You got that little move. Remember, I glanced at that this morning with the tick not confirming. You had the little, let's see what's laying down here in terms of stops. And boom, right back up. Choppy, choppy, choppy. Oh, little weak close, but still. Nothing substantial. The only interesting thing is lowest close of the year again so far in the futures, unless we really get a rally in the last few minutes. What's the areas I'm watching tomorrow? I'm just going to go over this. Here's my breakout. This could be modified. Remember, this happens an hour before the CPI prints, an hour before the market open. So unless we get something substantial with overnight price action, which can always happen, then my levels could change off of that. But as of now, 35.88 and 36.27. 35.88 has to be broken either with a ton of momentum and then take out the 35.71 to the downside. Then if we take out 35.71, 35.68 will just be minor. 35.57 and then 35.40 are the next major things to the downside. To the upside, 36.27 is my key level for the S&P. For a break, we're still in some key resistance above there. So 36.41 and then about 36.50 would be stop, raise, / take, partial profit, move levels. All right. If we are below 35.88, 35.89, 35.88 going into the number, that will be the first little area of key resistance. So that will be something to keep in mind. Let's see. My thoughts on CPI. Yeah, I think it's gonna, you know what? I think it's a whole bunch of big deal about nothing. It's going to be volatility. It'll probably come in closer to in line, but we're already, you know what? We're getting to cycle bottoms closer on the 4 hour. We'll probably get to those overnight. Cycle bottoms on the daily. Cycle bottoms on the weekly. We're against the weekly 200. So unless we have a huge miss, which would be something substantially over 8.1, probably closer to 8.3, 8.4. I'm not, push lower is going to be hard. There's a lot of buying pressure in here. So there's going to need to be a ton of selling pressure to take this down, especially at already, I mean, look, we've 1, 2, 3, 4, 5, 6 days down into a CPI holding key support. It's going to take something pretty hefty to blister this market to the downside. By the way, there is no aggressive buy above today's high. So it would just be a shorter term play to the upside based off the momentum. One potentially concerning statement in the FOMC notes the number of participants commented that a wage price spiral had not yet developed, but cited its possible emergence as a risk. Yeah, that's why I don't think they're going to ease up anytime soon. And that's also why, all right, we got from the Fed speakers, we're stressing, and I'm going more off the Fed speakers than the meeting minutes at this point because they're still saying inflation's going to go up, we're going to slow down, and we're still targeting rates overall around 4.5%. So there's a lot of room to still hike by next spring. So is even, let's say CPI comes in, and we will get, I think if CPI comes in, the headline number at a 7 handle, we will get more of your rip your face off rally, but that's not going to change anything with the course of the Fed. We are in close to oversold conditions. We have divergences, sorry. See how we're waning? This is actually setting up for a triple divergence. Nearly. Technically, no on this last little bit because we didn't technically take out October 3rd lows, but we've already had a double divergence down here. We could see overnight with a push down or a push down and reaction, which would set up for a triple divergence. So unless it's a horrible miss. Now, I'm going to trade price action, period. That's what we're here for. If I had to make a bet, though, I'd have to say I'd lean on the buy side. But you know what? Price action will rule. Considering an SPX straddle in the morning, wondering if I need to be talked off a ledge. The problem is the volatility right now. The volatility, and if that comes in line, it could be a volatility eater. You're going to need a pretty hefty move. So that's the thing. With the volatility being up here, and volatility, if it comes in line, you should see a decent vacuum in volatility, which will crush option premium. So that's the gamble with the options. Yeah, this would be a thing because it's when everybody's anticipating something, unless it's something significant. See, even if we come in better, this is where I really think we need to, it'd have to be a huge miss to really take out these lows, a huge miss. Or something very bearish between all the different numbers. Because you got elevated VIX, it's already pretty sold off. You got cycles and oversold at the bottom. So, I'd rather play this short term, and then it's we'll see. Inside day, by the way, inside day on the S&P today, which is volatility contraction, which you saw intraday just with the back and forth price action. But those are, I outlined my key levels. The NASDAQ, with this pause here, now we can go to forward harmonics. Key little area now with the NASDAQ is that I'm keying off of. It probably won't change much with overnight price actions about 10,975. To the upside, it's pretty much the lows to the downside. Then if we traded down there tonight, 10,731 is the key support level I'll be watching. But if we break through there, 10,647 minor, major 10,536. To the upside, it's that 10,975 area. then about 11,000, 11,014, then above there. Above there, about 11,090 to 11,100. So again, cycles on the 4-hour getting down there, but the daily's at the bottom. Also remember, any pop would just be, at least in the short term, back into the rotation zone, and this is still a little mini valid double. You still have a little mini double on here, which could trigger a more substantial rally. Once that is triggered, it is still put. Now, if we get a big push down tomorrow, no. You hear what, Bears? You hear what? I mean, this is, you know, I would love a flush down move though. Coco thinks it's good. All right, now I'll think. See, I'm bullish now. Coco thinks the market will flush to COVID high tomorrow. I'm bullish. Just teasing you, Coco. Most people are buying puts for tomorrow event, so I don't think the market goes lower than where we are right now. I got to lean on the side of bullish unless I see something overnight. I got to lean, but it's still going to be trading short-term price action. I want this thing to crash to C19 low as much as the next guy would have to rally a little to allow for a good fall. We are heading lower. I gave you my thoughts. I think we have much more room to the downside after we get out of these conditions. Market will go straight to pre-COVID high. Remember, we're holding that 200 now, to pre-COVID high. So you're saying 33.82? Roughly 33.80? Now that would probably be a capitulation move. That would rip your face off to the downside. I could see that on another lower push. I mean, again, I need to see a huge miss. A huge miss for that to happen. And especially in the core number. We are set up for potential capitulations, but capitulations are very hard to time and predict. I have not found any reliable indicator in 30 years of this to predict a capitulation move. I've found reliable indicators to predict potential capitulation, like that, hey, whenever there's been a capitulation, this has been the overall market internal structure. However, that structure can be in place for a while and then you get the capitulation move somewhere within that structure. That's the problem with timing it. It's not like a day or a few or even a week before. It's like, hey, we're set up for the move. It's going to happen next week. I've not found it. And I've looked. All right. Enough dwelling on that. The Dow. The Dow, yes, the double still's in play. Inside bar today has not been able to push down to 87.5. Nothing else has really changed with that. We've already covered the S&P and the NASDAQ. The Russell inside bar also. Key area on the Russell is 1720, and the breakdown is 1695. If you want the Dow stuff, I'm repeating myself for other things. My breakout on the Dow is 29,540. My breakdown is 29,050. The DAX key area going in over, well, based off the European stuff. Still no close below the 62.5. My breakdown area is about 12,130, and then I'll start targeting the retest of the low area. My breakout area for this is about 12,300. Notes, inside bar today. So breakout areas is a little higher on this, about 111.26 to the upside. Trying to put, and breakdown to the downside is starting to get momentum about 110.31. Dollar index, no inside day, but pausing right here. If we do rally, watch for the short-term pullback in the dollar index. Gonna keep close eye on this overnight at 113.50 if we do push up in that. VIX, we'll have to cover that tomorrow, but remember there's still a gap left behind. We start rallying, we'll be breakdown below, easily below 32.40. Easily. If we get that tank move, then I'll be watching for this to start edging up rapidly into the 35s. So no great news there. Crude just below, still holding this significant 86.50 area with the daily rotation zone. Now there is a resumptive buy above today's high. But that would need a close above today's high, and it's a long way off even from an intraday trigger. Nothing else there now. If we do pull back a little more overnight, we got a little potential double bottom at a key trading area. That's what I will be looking at. If we break down this, today's low does not hold, my next target 84.95. And then we have some key support right around about 83.50, right before the 62.5, 82.77. What else do we stand at? The yen, this was a pretty substantial move. So I am going to be setting alerts for this evening that will wake me up if we do get an intervention move. If we do not, still 147.80 is the next target area higher. And I bet you if we push up there, if there's no intervention, we continue this push up, especially that next harmonic area, we will be seeing intervention possibly by the weekend. Euro, everything's keying off of CPI. Flat day. Pound, held the 50% retracement. Nice little retracement up, but nothing else yet. Bitcoin has gone to sleep inside day. Tesla, little reversal. Aggressive buy on the close above today's high, which would target a return to the daily rotation zone. So that would be played, especially if the market breaks the upside, for a bullish short-term breakout before another rollover play. And that's only for a short-term bounce, nothing more than that. And again, if it's no close above today's high, no trigger. Spiders, let's get to those, and the Qs, although you're going to have to either trade it pre-market or getting something post-market this evening. This is now, the double is off. You can see it here as a triple, and even if you look at the 4-hour, nothing there. Nothing there, and I'm bumping up my breakout level. I'll be using the S&P to key off of, but for if you're playing the SPYs, 361.40 is the level, and then I'm keying off of, there's some significant level right around 363.80, which would be a primary target, not just for tomorrow. Your key levels are still 354.24, 351.44 to the downside. By the way, this bigger double is still fine, but we're a long way off from that. The NASDAQ, just want to update this right now. going into tomorrow. Yep, those. So if we do break down 258.76 to 258.14, then 255.24, breakout level at this point, which would be probably hit pre-market, 265.65 area. And then the next key target area, you're going to have a minor target at about 267.10 for a stop raise from my perspective. And then you have some pretty strong significance about 269.10. This double will probably be off the table. I'm just going to pull it off. I'd be using those key levels I talked about anyways. Do keep in mind on all these things, if you start getting major upside momentum, there are clear paths, and not just for tomorrow. There's a lot of stuff to chew through. But then you do have clear paths. Like we start getting back above this 36.75. Again, not necessarily for tomorrow, but for Friday. Also, if we do start the rally back and above 36.87, you have some clear paths left to the upside. So we could see there's some price voids in here, at least to the area of the 62.5. And if you can't rejoin me for some reason, and we do get the rally on and it lasts more than a day or two, one of my major targets is the 62.5 area. Why? Not just because it's a 62.5 harmonic, because it's also this prior key resistance area. And if you want to do some volume profile stuff, you'll see it in here, and a key breakdown area. So we got a really nice cluster up there. There's a sizable 150 strike December straddle sold today. In what? You got to put the symbol in whenever because I loop back around to the comments. So whenever you cite a specific thing, please put in that same comment the symbol. Theoretically, I need a push down for implied volatility. Yes, a push up would favor volatility contraction. And why did volatility, even with this choppy, stay elevated today? For late hedging going into tomorrow. If the 200 won't hold off, what time frame? Like by the end of the week, if the 200 broke, I'd be targeting in the upper 3400s. If we had major break. Longer term, which is more likely, when we break the 200, then I'm going much lower. If we bounce first off this 200 area, then when we roll over and take it out on the next down move, then it's lower than that. It's much closer to 3,000. Well, you're not stupid. I'll tell you if you're stupid if you really want, but you're not stupid, Sterling. I just, are you referring to the symbol? In Apple. Okay. What's behind a what was it, 150? I'm now scrolling back through, which is why it's helpful. Just for my own benefit, it's helpful to put the symbol, because then I don't have to scroll back through to find the comment. That's just why, it just saves me some time, which I guess you don't have to worry about, but makes a better live stream probably. 150 strike in Apple. Then we had another thing earlier with what was it, AAL? what's with a 150 sold? They're targeting a return. It would be targeting a return to the 200 and return to the 200 around this area. So it would be a play. I haven't looked at Apple volatility either. I'd have to look. See, when you also ask these questions, I'd have to look up some information, which I don't have in front of me right now. Hold on one second. Let me just see one thing. Because again, everything comes into play with options. If it's a smart player, then again, I need to look at the volatility. Why do I need, and I'm looking at another screen, that's why I'm looking in the other direction right now. This is going to be a little hard to see. All right, so we're at pretty elevated implied volatility right now on Apple is up around 45%, and I can't open my trading platform. So somebody just, if you have your trading platform open, because it's going to pop up on the screen with my friggin' account number, will you call up and just verify that I have these numbers correct? 45% implied volatility. So, could somebody verify that for me in Apple? If you have your trading platform, whatever it is, I mean, if you're using Thinkorswim, you can just go to the options matrix and look up and change the headings to the implied volatility headings. Just give me something. You don't even have to give me the 150 strikes. Just give me something like at the monies, the 140s, 135s or 140s. I'm just curious if you want to give me the 150 strike, you can. So what would that be? If that implied volatility is higher, based off this chart, that would be a reduction. You're trying to sell volatility with a return to the 150 area, which is roughly the 200 simple. So that would be a bullish play, selling volatility. So a compression of volatility going into December with a bullish bias. That's how I'd look at that play. Separate from knowing any other positions. Remember, positions can't be taken in a vacuum. So somebody sold this is where it's tough to understand, because somebody sold a sizable 150 strike straddles. You don't know what they already had in play. You don't know what other option months they have in play. You don't know. See, you could be selling a straddle and you're just selling a put and a call, right? But if you have other months and or other options already in play, and you just so happen to need to sell a put and a call both at the 150, yes, it would be a straddle, but it could also be a hedge where you needed to sell a put and a call. From just analyzing it in a vacuum with a volatility compression, why? Because if you look here, let me see if anybody else has this. All right. Sterling, thank you. You have the implied volatility, 45. Jacob, 48. And again, depending on your strike price, whatever, we're at that level. Okay? And I just call this, if you want something, a free resource, the optionseducation.org is a fantastic free resource for people looking. Hey, if you don't want to spend money on stuff, or you don't have it on, some people just don't look at options that much. And if you're not trading a lot of options, you might not even be set up, or not trading any options, you're not set up. But if you want to do the research, you can go to the options education.org. It's OIC. And you can look up per stock. So this is historical, which is based off the stock price. The blue line, IV's implied volatility index mean. What does the index mean? It's because every strike price can have a different volatility because of skews. So this is taking a mean of those things. You can see here, if I were to draw a line across here, where are we relative with implied volatility? Very high. So if I expect this to come in and return more to the 30 to 25 area, what am I naturally going to do is sell premium. I'm going to sell calls and puts. Well, if I then have a bias, so a bullish bias, if you had to say what's a bullish bias besides people, I have a double, but it's nowhere near triggered yet. Which, interesting enough, the first target is just beyond that 200. But if you were just going to crapshoot it and had a bullish bias, what would be a great bullish bias? A return to a 200. That's on the 4 hour. On the daily, it would be slightly higher than that. But look at this also. What's at 152 from this last down move? And this is a prior harmonic. Is a 50% harmonic. So we have a double target there. I don't know what they're looking at. But that's a really nice round number. And you got the top of the declining rotation zone. And just from looking at this, a breakdown zone from the weekly. All in that low 150 area. Nice little bullish target if you're a Apple bull and want to play volatility coming in through the end of the year. That's separate from any other hedging or positions that there might be on, which I would not know, nor would you. So that's why it's dangerous to look at, especially these things that, we saw this big trade go off at this. You don't know somebody else's position or what they're doing. You're taking any knowledge like that in a vacuum. Does that make sense? So one of the things that you're going to want to look in for those option players, you're going to always want to keep in mind implied volatility if you want to get good at playing options. Don't trade options in a vacuum. Why? Low implied volatility. Implied volatility is mean reverting. All right? Mean reverting. So, yes, and it can stay high or low for a period of time, but overall it's mean reverting. So if I know it's mean reverting, I'm going to take that in consideration with my positions. When we have very low volatility, we call this up again. When volatility, and focus on when it's great when you have historical volatility is always based off the price of the stock, so that can fluctuate a little more so. But look at your I wish I could draw on this. But look at this. What do you think happens if I want to play options and I see Apple down here, especially on a dip below 25%? Do you think I want to be an aggressive option seller, which would be selling the implied volatility, which would be selling, expecting it to go lower and contraction? Because when you have Vega in your favor, based off your options structure, you have another thing that can benefit you even if you're slightly wrong on price or timing. So if Apple was down here, and again, I'm not advocating a specific trade, I'd want to look for more option positions where I am a premium buyer, because if we get an increase in volatility, the position naturally goes my way, even if we have stagnant prices. Increase in volatility increases the value of that position. If I'm up here in high volatility areas, I naturally want to gear option positions to more of a premium selling. I'm looking to sell that volatility. Why? Because it gives me an additional hedge. Should I be wrong on timing or wrong on the price action, at least I have the volatility, potential volatility contraction coming in, which helps my position. If you don't know what I'm talking about, sorry for being a little advanced. We have all different calibers of people, and this is for the more advanced option players. That's one of the first things I'm looking at. So if you're trying to assess something, or why is somebody doing this, or trying to suppose, well, make sure you're always looking at the implied volatility. Otherwise, you're trying to analyze something with blinders on. Thank you, Jacob. Big shout out, everyone. Give a big shout out to Jacob for the super chat. That's exactly what helps support the channel. Please shout out everyone in the chat to Jacob. And also Sterling, thank you for the super chat. Again, 2 members that want to support the channel, and I appreciate that. Really, and I want other people who come here for knowledge to appreciate that. What do you mean? How do you close an option? Well, you buy it back. Now you're buying it back at whatever you don't want to exercise it. Remember, there's 2 ways to close an option position. You can buy it back or sell it back. So if I'm long a call and it's gone my direction, I can sell it prior to expiration. I have to sell it. If there's premium in it, I don't want to exercise it. Why? There's only a very rare time when you'd want to exercise an option early with premium in it. There are instances, but they are rare. So you don't want to, if you want to close out an option position that has premium in it ahead of time, you don't want to exercise the option. You want to do the closeout trade. All right? So if you're long premium, you want to, therefore, long, whether it be a put or a call, you want to do the natural sell order. If you have something where you were selling premium and the premiums come in from the point you sold it, then you'd want to do the corresponding buy order to close it out. You don't want to let's just go from the long options, whether it be a put or a call. If it's in the money and you still have premium, you don't want to exercise early except for rare conditions. You want to sell the option, which means you're going to get the current offer, or you're going to split the bid and offer or work the order, but you're going to want to unwind that position that way. Jacob learned about IV Crush the hard way. Let me just, does that make sense before I go on to anything else? Please let me know, for the people who follow options, if that makes sense. I'm sorry if I went over some people's heads, because again, options can get complex, and a lot of people don't explain this. They just say, hey, you're going to go buy the cheap out of the money calls. It's like a lottery ticket. So, all right, you're following me. All right. By the way, I'll just then I'll get to a couple other stocks and I'm going to call it a day. I've talked about Intel before, and I'm not advocating a trade or anything else. But I've also been asked, well, you talk about cash secured puts to possibly pick up a stock or pick up the premium. This is the exact same kind of thing, the exact same kind of environment. Especially people are like, you're insane. They're announcing layoffs. We're way overextended. We're very oversold. We are setting up for at least a sideways to potentially bounce move at some point. Why am I bringing this up now? Because, let me call this up real quick. Where's my... Hold on. Because I love to do cash secured puts. Look at the implied volatility on Intel. And I'm not advocating anybody do this trade or anything else. I'm just showing you something tie in. Look at this implied volatility. So that is juicing the puts. So not only is if this just trades sideways, all right? Not only is this just trades sideways, or even goes slightly down, you can collect a very decent premium on this. So it gives you a cushion. Even so, and if you want to pick up the stock, like you get that cushion from whatever strike price you sold. So you're even getting a better deal. If you don't understand this, don't worry about it. Or if you don't get assigned because it holds up, you can collect a decent premium return on investment and always just go buy the stock if you still like it. These are the kind of environments I like to do cash secured puts in. Separate thing. AAL. The AAL above 13 is an interesting play in the short term with a return to around 1360 on a breakout play. Remember, Delta Airlines is trading, is announcing, so we can get the sympathy moves either up or down, but the breakout play would be about above 1295. Other than that, nothing. Again, are you closing it or are you selling it? Because you'd have to sell it. Call your help desk with whatever broker you're in. Hopefully your broker has a help desk and is not Robinhood or something else. And ask them. Because you want to sell it back. You don't want to just close the position because a lot of things, closing means exercising. You want to physically sell the option back, which would close out your position, but it's closing it out by selling that option, not by exercising it. All right. That's about it. I'm trying to say, oh, WEAT. And then I am... Well, there's... I really don't have anything in WEAT. Uh, on WEAT, I mean, it's just you got a slight upward bias. I'm just looking. There isn't right now. It's in no man's land. My only bull play would be back above this 950 area to about 10 bucks. I'd be very careful if you break back below 880. Not only is it harmonic in your 50, you'd probably see a pretty rapid return to 831. But other than that, there's just no fantastic patterns besides this short scalpy channel to the upside. Just watch it because your channel's flattening out. William, you can be removed. I already covered Tesla, by the way. On a break above today's high would be a bullish breakout, potentially rolling into a percent B buy move. And that would only be on a short term bounce move, possibly back to 233. That's the only thing. Everything else, unless, now I will caveat that, unless we get a major breakdown play below 206. That's the only bullish play. Other than that, there is really, it would be on a very short term basis, and there's no fantastic pattern just yet. All right. I am going to wrap it up for now. Thank you for tuning in. Again, one more big shout out to both Sterling and Jacob for the super chats. They keep the channel going. Sterling with the $20 and Jacob with a $10. And I really do appreciate this because this channel costs money to run every month and takes my time. And if for the people who've contacted me and told me to stop bitching, I get money from ad revenue. You want to know what the ad revenue and super chat revenue was for last month? $191. So don't tell me that crap. And that's with super chats. So that's why there'll be some changes coming up. Probably some ways to join this channel for low costs to help fund the channel, because I think there's a lot of great information given out here. And if people can't afford like $5 a month, then A, you shouldn't be trading. B, I've kept it free with high quality information. A lot of people charge way more for a lot less. So that's why there'll be some changes at minor price points, and then things will still be support the channel. By the way, I've also opened up super thanks. Beyond super stickers, super thanks should be opened up. I'm trying to keep this inexpensive for the majority of people. And there'll still be no requirement to do anything. There'll just be special perks for the people who want to subscribe at a very low cost thing to support the channel. If you think about how many, I was doing some math today. I put in, just on this live streaming stuff plus pre-recorded videos, over 80 hours a month. Not a week, a month. So that's 4 weeks. If you do the math, even if I were to say my time's worth minimum wage plus expenses, we're easily over $1,500 a month just to run this channel. So trust me, it doesn't make money. I do this because I care about people. but I'm going to put in some more things so people can help fund the channel. Because I think my time's at least probably worth to offset expenses and cover some of my time at least $1,500 a month for the amount of live streams and information that's given out here. And again, if you don't want to join, that's on you. So that's just a little update I will be working on. And if you want to give me feedback on it, let me know. Somehow I knew you did the math. So for people wanting to learn, no, it's not going to be some outrageous amount of money, because if somebody can't afford $5 or $10 a month for the amount of information that's given out here, A, you shouldn't be trading, or you're just a super cheapskate. And that's a funny comment joke. Jacob wins the comment of the day. Somehow I knew you did the math. With that, I will be here. Hopefully Bob will be able to join us for the CPI number at 8 tomorrow. So consider tuning in for the Market Open live stream, and we will analyze that price and come up with our next key things. And by the way, the ways to support the channel, other than some way to join at a very low cost, will still be available for the people who I really appreciate, who do donate for the time and knowledge. I just wish more people would do it. This is a place for serious traders. You can pay Mike a reasonable fee or continue to pay the market much higher. That is true. That is true. And I guarantee, like, even I think in some of the option discussions today, even what I'm pointing out with cash secured puts, and you don't, I don't care if you trade Intel or not, but just look for that. If you're willing to do cash secured puts, look for those kind of volatility moves going into really bad news with major oversold conditions. Those are prime. If you want to set up a scan, if you want to set up stuff, and it's only for a stock you want to own, but that's invaluable information that people charge a bunch of money for. And that's just a way to, you could make a living doing cash secured puts. When you take delivery of a stock like that, you do some writing covered calls against it. You can make a decent living that way. With that, I will talk to everyone later. Thank you, Patrick. Thank you, John. Thank you, Jacobs. Thank you, Sterling. Thank you, everybody else, for being here. George, Options 22, William, Coco, Wizit. And if I forgot you, sorry. I'll talk to you